AML Audit Step 4 Transaction Monitoring. Reviewing the organization's transaction monitoring processes is a crucial step in an anti-money laundering (AML) audit to ensure they are effective in detecting and reporting suspicious transactions. Transaction monitoring systems play a vital role in identifying potential instances of money laundering, terrorist financing, and other illicit activities. Here's how to assess the transaction monitoring processes. 1. Obtain transaction monitoring policies and procedures. Obtain the organization's transaction monitoring policies and procedures to understand how they use technology and analytics to identify suspicious activities. 2. Regulatory compliance. Ensure that the transaction monitoring processes comply with all relevant AML laws and regulations applicable to the organization's jurisdiction and the countries it operates in. 3. Risk-based approach. Verify that the transaction monitoring system is designed with a risk-based approach, taking into account the organization's specific risk profile, customer base, and business activities. 4. Adequate scenario coverage. Check that the transaction monitoring system has an adequate number of well-defined scenarios to identify suspicious activities, considering different transaction types and customer behaviors. 5. Threshold setting. Evaluate the thresholds set for monitoring transactions. Thresholds should be realistic and capable of identifying suspicious activities without generating an excessive number of false positives. 6. Real-time monitoring. Ensure that the system performs real-time monitoring of transactions and can promptly flag potentially suspicious activities for further investigation. 7. Data quality and integrity. Verify that the data used by the transaction monitoring system is accurate, complete, and up-to-date. Poor data quality can lead to ineffective monitoring. 8. Alert investigation process. Assess the process for investigating and resolving alerts generated by the transaction monitoring system. Adequate resources and expertise should be allocated to review and escalate alerts as needed. 9. Escalation and reporting. Verify that there is a clear process for escalating and reporting suspicious transactions to the designated authorities in a timely manner, as required by AML regulations. 10. Quality assurance and testing. Determine if the organization conducts periodic testing and quality assurance reviews of the transaction monitoring processes to validate their accuracy and effectiveness. 11. Training and awareness. Assess whether employees involved in reviewing alerts and conducting investigations receive proper training and are aware of the latest money laundering trends and typologies. 12. Documentation and record keeping. Ensure that the organization maintains comprehensive documentation of all alerts, investigations, and reporting related to suspicious transactions. By conducting a thorough review of the transaction monitoring processes, auditors can identify any deficiencies or gaps in the system's capabilities. They can then provide recommendations to enhance the effectiveness of the transaction monitoring processes and ensure that suspicious activities are promptly identified and reported, thereby helping the organization meet its AML compliance obligations. Thanks for watching. Content by C.A. Sheikh Anwar Hussain +971 58562 1786.